Hey, what's up, guys? rayBar checking in with another market update. Most of y'all are gone at this point in the video. So if you're still here, smash that like button so I know you're here. Please subscribe if you haven't already and tune in for this video. I think this video is going to be pretty good. It's going to be a general market update with a couple key indicators to look out for the week. So let's get into it. So if you look over the past week, the market was down. I think this is the worst market week since around March of this year. Overall, for the past 3 months, or for the past month, we're up pretty decently. 3 months, even more so, right? Year to date, we're still trading up pretty good. I always like to look at the S&P 500 index as kind of like an indicator of where we're at. See, so about 10%, 3%, 1%, down 1% and barely down. I think that my portfolio, the majority of my holding is in VOO. So that's why you will see me kind of track to the market. But even though you are seeing that, they're up about 10.5% for the S&P 500 index, I'm up about 9%. And I think that's a little bit incorrect, only because I am trading options and I'm making premium that you're not seeing reflected in my overall cash balance because I collect the premium and then it bounces out. Talking about options, I still have my 3 option play, which I think is going to end up bombing out. And I'm going to lose 100% on that, which is about $30. Sold a put on SoFi at the $8 strike. I made a $16 credit, if you see right here. It's trading at about $22, but I think what it was is I had opened it up a little bit early because I opened up, right at market open and, ended up, losing a couple bucks. But I think overall, SoFi will end at around the $8 price anyways, or maybe even $8.50, $8.20, and I'll be fine. I opened up this call or put credit spread on Tesla. Tesla has been on a run recently. It was in the 50s here, but see, it's actually down a little bit. When I opened the put credit spread, it was hovering right here at the peak. So I should have waited a little bit, but I still think that, I'm safe at this 230 strike price. I made $14 credit on that. So that one I'm down about 20, but I think this one will end up expiring worthless and I'll be good. Let me know if you guys want me to do a video on the put credit spread or the call credit spread. It's a little bit more of an advanced option play, definitely more risky than a cash secured put or a covered call. But I think it's a great way to kind of outsize your gains. Whereas, I was making 2 to 7% every 2 days running the same strategy on SPY, which is another S&P 500 index right here. So I think, the market is down today. I think overall as the investors are, kind of feeding into the idea that maybe there are more rate hikes on the horizon and that, other issues could arise from those rate hikes, right? Like jobs, housing, the potential looming commercial real estate crisis that is, on the horizon. Could affect a couple of REITs. Good thing about Realty Income here and why I pulled this up is they had actually divested and got rid of their commercial real estate properties in terms of office buildings. They actually still play in like more retail buildings like, the Walgreens, the CVS's, and the Walmarts that you see. Another thing that I think that could be an issue with the looming rate hikes and the continued rate hikes actually will be the banking crisis, right? We saw with First Republic Bank and kind of the other middle market banks were struggling. Then kind of the fears eased down when other things popped up. But I think if investors and other folks believe that the Fed will continue increasing interest rates, as Powell has said, 50 basis points total within the year, then, we could see more cracks start to pop up. Another thing I think that, we need to look into is, crude oil. So I'm just going to pull up an oil stock here. Chevron is actually doing really good, but I think it's, we have a little bit of prolonged turmoil in Russia. So with that whole, break off group that was marching towards Russia, I think if anything, that just points to more oil price uncertainty as, Russia is kind of a major player in the oil space. So, it doesn't seem like the super majors are actually that affected, but I mean, I think the actual oil price could be. Finally, what I'm going to go into is this week, there's a bunch of stuff to look out for, right? So Tuesday, Wednesday, Thursday is going to be pretty filled with information. Tuesday, we have U.S. home sales. Wednesday, we're going to have U.S. wholesale inventories, as well as the annual bank stress tests. I think the annual bank stress test will be a huge indicator of where the major banks are in this rate increased environment, and where, potential cracks could be, right? I think as long as you bank with a super major in the banking sector, like a Bank of America, a Wells Fargo, a JP Morgan, any of those, I mean, honestly, it's one of those too bigs to fail. I don't think that you're going to have any issues like you would if you're banking with some regional bank, So concerns, yes and no. Next, we have Thursday, we have U.S. GDP, and then the initial jobless claims. I think those are going to be huge indicators to look out for this week to kind of see what dictates the market movements. And then finally on Friday, we have U.S. personal income and spending. I think that will also point to where we think inflation is heading and how the consumers feel. So, with that said, there's a lot of information that's coming due this week. Trading options might be a little bit risky because of all that information. We could see violent swings up or down. But overall, I think that, we are in a good spot. Let me know what you guys are buying this week or selling this week. If you're still here in this part of the video, comment notepad. I appreciate you guys. Love you guys. I will see you on Friday.